Okay, good morning, everybody. It is Wednesday, March 30th, 2022. We're going to go ahead and start with our pre-market analysis on the S&P 500 futures market. Just to quickly look at yesterday, couldn't have gone any better. Right out of the open was a really strong bullish push. So anyone who was there yesterday would have remembered we were coming off of almost basically a half day of a continuous rally to the upside. So coming into the open, it seemed like the bulls were just going to continue to push because we held the 34 fast moving average, started to really aggressively buy and push the market higher, tried to get long off the pullback to the 34, and that was right when things started to turn around. And so we started trying some shorts on the way down. Interesting to note that we came right into VWAP, which I told you guys in the room would be a potential area for a bounce. And sure enough, made a nice little double bottom with a bullish divergence and got a push right up into the 200 moving average. And then went ahead, and what was the low of the day? The low of the day to the tick was our orange power level to the tick. So came right into our orange power level. How many mornings do we see this line hold on the bottom and the top end? Unbelievable. So came down, held the orange power level, and from there had this nice strong rally. And where did we push and reject from? Our major eye level at 40, or our minor eye level at 4600. So we came down to the power level, held it by a tick, or held it to the tick, came up, held 4600 eye level within a tick or two, got a pullback, and then when the bulls started to rally, notice they came right back to 4600, got a pullback again, and then kind of went a little bit sideways. It kept holding 4600 here multiple times. You probably could have shorted that for little scalps down. Let's see, 1, 2, 3, 4, 5, 6 times before it actually finally kind of broke through. It got a little bit messy, but then when we started to really rally higher, I just want to point out that the high of the day was our next eye level at 4631. So this it's just like day in, day out, unbelievable reactions off of these levels. So that's all I have to say about yesterday. Beautiful respect of all the levels that we watch. It doesn't get better than holding the level to the tick, the low of the day and the high of the day being the levels that we focus on. So that brings us into this morning, and as you can see, we basically kind of went sideways, petered out here, haven't broken out of the previous daily range, and we're basically playing around right around 50% of that previous daily range right now. We're also obviously pulling back right now. Looks like sellers are a little bit heavier, selling the back end of these levels now. Seems to be working out really nicely. In fact, our orange power level this morning, sitting here at 46.16 was exactly where we came up to, tested on two, made a double top and failed from just maybe an hour or two ago. So that's where we are right now. Let's go ahead and do our top-down analysis. We'll take a look at everything and see what levels we want to focus in on this morning. So going up, I don't think the higher time frames are going to have anything new to say. Our monthly, like we said, did finally kind of break out, my weekly, where we go back here, our monthly finally broke out and got through the previous monthly high. So we talked about that yesterday. Nothing really new to say from that perspective. And the only other thing I'm going to say here on the higher time frames is just like we were watching potential divergences off the highs down on the daily chart here as it was pushing higher and higher, coming up to test that major double top we made. We started seeing divergence on the monthly. We kind of see it right now off of that double top that I just mentioned, going up to the high right now. On the monthly, on the weekly, technically we have a bearish divergence, right? We've pushed significantly higher in price. RVI has pushed significantly lower. So I am kind of watching that as well. I'm not saying that means we're going to sell off from that point. But when we start to get an alignment there, when that weekly, that daily, and maybe even that monthly start to show something, that might give us an idea that there's some major weakness in the push. But we just want to kind of be aware of that right now on the weekly. And that's about it for the higher time frame. So not much has changed. Let's go down now into our daily time frame here. I'm going to have to update the 50% of yesterday, which happens to be 45.98 quarter. Let me just do that really quickly. Apologize about that. 45.98 quarter. So let's see where we're at here from this higher time frame perspective, I should say. We're right up into kind of this chop zone before we come up to that major resistance at 47.39. Keep in mind that the resistance zone that we had above that we talked about yesterday from about 46.90 to just about 4700 is still in play as a potential resistance. So we're going to want to be aware of that zone there this morning if the market continues to push. And again, if they get through that zone there, it's probably right up into this major swing right around 47.38, give or take a few. Outside of that, I don't really see anything else that sticks out on this daily to mention. If we do actually start getting a major pullback here, a major correction of the current leg, we'll go ahead and draw the fib. But for now, if the bulls continue to chug and inch higher and higher, we're just going to have to keep coming back and redrawing this to the highs. So until we start really selling off, I'm not going to worry about the major retracement. And I think that's really it. We have all these major swings that we've been watching, all labeled. They should be on every chart. And I think that's it from this daily perspective. Again, looking at the current candle, really strong daily candle from yesterday. Current candle, we're stuck inside of that range. All right, let's get down into the intraday time frames here, and we'll start to look for levels to watch this morning. First thing I note when I looked at this chart this morning as we're pulling back here is that we do have a argument for a bullish divergence. The only issue I have with this kind of setup is that we have a lot of space below. We can come all the way back down to this low at 45.09 and still technically have a bullish divergence argument. That's another, what did I just say, 45? That's another 100 points to the downside. So this is not necessarily helping us pinpoint the low, but it is giving us an indication that there's a potential bullish divergence going on down here. So if we start to get the 60-minute, the 30-minute, and everything else agreeing down there, we could expect to see something go on. Outside of that, don't really see the strongest bearish argument off the high telling me that we're not necessarily done with the push. If I go up to my daily, the daily doesn't have any type of strong bearish divergence. The 4-hour also does not necessarily have any type of strong bearish divergence up there from a relative volatility perspective. So because of that, I would expect there to be maybe a retest of the high or a continuation higher or some type of peak above to then fail. And when that happens, we should get some type of bearish pattern on the RVI. And that will be our clue that maybe we'll get another pullback. But remember, in a strong bullish push, which is what we've been in here for about 2 weeks now, off the highs, we will get bearish divergences that lead to pullbacks. It's just those pullbacks are pretty shallow, right? Because the bulls just continue to jump in. So that's what I'm seeing on the 4-hour potential for a test of the highs or a continuation even further from here. And notice where we rejected yesterday. We said that if we come up, we have two structure zones kind of, there's a gap here. So the gap started, like I said, somewhere around 46.35. We happen to have 46.31 sitting right here. That was the high of yesterday again. So we came up into that bottom end of the structure, or I should say the top end of this specific structure zone, and we are pulling back. So the pullback is not surprising. That was the expectation from up here. And then again, we have the next structure zone up top starting right here around 46.50. And I think I have a major level sitting right there at 46.58. So that is the beginning of the next major chop zone, which goes from about 46.58 to about 4700, 46.95 up there. So if we continue to push this morning and the bull stays strong and we can get through 31 to 35 there, I'd be looking at a larger target up to 58. Again, keeping in mind there was a minor level or two in between on that push up to 58. Any further than that, we're up to that zone we talked about yesterday and the day before that, which is that 4700, that major zone right around 4700. Again, there are some minor levels in there. I think there's a 4695. I think there's like a 47.0 something. Generally, right around 4700. And then a little bit deeper, we get into our final resistance zone before we're right back to the all-time highs. And that is this major zone right here, right around 47.38, 39, 47.40-ish. So that's what we have above us. If the bulls just rip this morning and get through there, it's basically a nice straight shot to the all-time high again. See this little pocket in here? Right up over here. That major low, 47.41, if that breaks, there's not much going on within there. That tells me that we couldn't expect a test of the high of that little zone there. So just keep in mind that's what we're looking at to the upside this morning. On the pullback, we're going to have to consider all these levels that we have below us here if the bears start to jump in. And I'm going to go down to my 60-minute chart here, and we can go ahead and look at the more local region here. So a little bit less zoomed out. In fact, I might want to go down even one more time frame here. But let's just take a look at things here, since it's kind of a skirting the high and the shorter time frames here on the 60-minute. Again, from the high of yesterday, from 46.31, there's also not necessarily a nice clear 60-minute bearish signal from the highs either, which again tells me that we will probably come up and retest it, or come up and peak above and fail, or continue going to higher highs. Doesn't have to happen. I might have to eat my words this morning. The market could just start failing, right, and start really selling off and never come back to test the highs. But what the signals are telling me right now is that it would make sense for something like that to happen, to come back up and test these highs or continue to go. Doesn't have to happen though. I always have to put that caveat out there, regardless of what signals are saying and what the interpretation of everything is saying, doesn't mean they're going to do the complete opposite, right? So let's take a look here. We closed yesterday right up around 46.20, and Steve, I'm sure as you know, we've seen the fill of that gap pretty often. So a push right back up into 46.20 wouldn't be surprising. And then again, our expectation is that we would come up to retest those highs of the overnight session and the previous daily high. So those are the kind of things I'm seeing above. Another thing that I'm noticing here, and I want to go down to the short time frames again, is that we have our orange power level this morning at 46.16 quarter, and we have come up, the market has come up and tested it with a double top and got a rejection. So staying below that orange line is an indication for the bears. Remember, these are just kind of general ideas for trade setups. It's not a hard rule. Just because you're below the orange line doesn't mean it's a seller's market and every single sell is going to work. And just because you're above it doesn't mean you're technically in a strong bullish market. It's just one level to orient ourselves. And again, getting below the orange line is a bearish clue. Getting below 50% of the previous day, even stronger of a bearish clue. And then finally getting through the previous daily low at 46.56 or 45.65 is also stronger bearish clue. So just watching that this morning, noticing that we're holding below the orange line so far. And then let me look at the retracement here really quickly. So yeah, it was just about 50 to 61.8 of the overnight session. So that orange line is in the perfect spot there. Um, keep that in mind. So keep in mind what we're interpreting from that. And if the market does start to sell off this morning, we've already considered everything that we have above. Remember that 46, 42, 50, little sneaky, it's right in between that major high from yesterday and our major level at 58. So there's 42 up there. But if things start to pull back, we still have to consider 50% of the previous day, which is very close to the low of the overnight session. And it's right there by 4,600. So this whole little pocket here, and let me just see if I can bring this out. This whole pocket from about 4,600, which that level yesterday worked amazingly, down into 50% of the previous day here, somewhere around 45.98. So let me get this on all my charts. We will lock it in place. We got 4,600 down to 45.98. Perfect. So that would be that first critical zone that we're going to test here. If it breaks through, we've got something pretty close, another 7, 8 points down into that swing high from yesterday, right around 45.92. But now that I'm looking at things, we've been chopping around all throughout that level. I'm not so sure I'm going to want to hang my hat on something there this morning. So what do I want to look at? We've got the retracement of yesterday, which, honestly, we've already got 50%, and then the 38 is what we're testing right now. So maybe we want to be aware, rather than that 92 level I was just talking about, we want to be more aware of this 45.90 quarter. That is 61.8 of the entire previous day. Again, we don't know what retracement levels are going to work, but we do know that we see the 38, the 50, and the 61 work more often than not. So 90 quarter. Again, we'll lock it. We're going to make this that dash dot dot for a fib and put it on all the charts. So if we pull back down through that 4,600 zone, we'll look at a potential hold around 90 quarter, and then if that breaks, it's right back down into 74, and 74 would be the level I'm looking at. 78 could hold, but 74 is the one I'm more interested in this situation. If 74 doesn't hold, it's right back to the lows of yesterday. And I've got this line on here. That's probably from a much shorter time frame structure there. But let's go ahead and just say somewhere right around 45.66 down into about 45.64 would be the next expected support zone. So let's go ahead, all charts, lock 66 to 64. Okay, and we're getting close to the open, but this is what we see here. Outside of the stuff above, which we've mentioned, we've got that 4,600 pocket. We've got 45.90 quarter as the 61.8 retrace, and then we're right back to 74. If 74 doesn't hold, we have to see what happened here at the previous daily low. From there, we're right back down into all the levels that we marked yesterday that I don't think we ever came back to. So we're right back to 45, about 45.50 up to the swing high at 48.50, that little 3-point range. And then a little bit deeper than that, we're going to come right back into this 45.13 zone down here. So let me update this to the 31st. That should bring that shaded region out. So that's what we got. We're getting close to the open, right around 4,600, 45.90, 45.70, right around the lows of yesterday. And then if that breaks, I think it opens us up right into 45.45 to 45.48. we've got, and then after that right down into 45.13. There are some minor levels all interspersed that typically we see hold for bounces and pullbacks, but those are the major zones I'm targeting here. Below us, that would be another 100 points down, and if we do push that far, we'll come back and take a look what else we have below there. So that, hopefully that helps you guys coming into the open this morning. Remember that we want to, rather than trying to predict the direction, we want to be fluid and adapt to whatever the market's giving us at that time. So being a dynamic system, it's continually changing, and you have to, as a trader, be nimble and be willing to flip your hat on the drop of a hat. So have a great day to those watching on YouTube. We got to get down to the short time frames and to our member section to see if we can get some trades coming into the open. So take care.